Joining me right now is Lebenthal Global Advisors President Dominick Tavella. Also joining the conversation all morning long this morning is Disruptive Tech Research Founder and Chief Analyst Lou Basenese, as well as the Wall Street Journal's Assistant Editorial Page Editor, James Freeman. Great to see everybody this morning. Thank you so much for being here. Dominick, thanks for joining the conversation. You're buying on weakness, right? Tell me how you see this market.
Yeah, Maria, we think the market bottomed out early part of this month. And at this point, the markets have retraced about 50% of the losses. So that's a really good, healthy spot. We were about 20% cash at the end of February. We're about 10% cash right now. So I think the markets had a pretty good rally here. I think we're going through a period over the next couple of weeks where we could see some volatility. We have a lot of noise coming out of the Fed and a lot of noise on inflation. But overall, we've been optimistic all year long. I think over the next couple of weeks, cautious, but I think still optimistic for the year overall.
Well, next week is the final week of the month, the final week of the quarter. We will soon start looking at first quarter reports on earnings in the coming couple of weeks. How do you think the earnings period is shaking out here, as many expect the economy to slow down and the Federal Reserve is raising rates into that slowing economy?
Yeah, this is going to be a volatile period, Maria. And when we look at this and we focus on it, it's really all about the consumer. Clearly, companies have higher input costs. So the cost of transporting the goods, manufacturing goods, materials, everything is higher. The key is, can they pass that cost on to the consumer? Is the consumer willing to pay those higher prices? If the consumer is willing to do that, then companies can keep their margins, and we will have a good year. We could see over $245 in earnings on the S&P 500. But if the consumer at some point says, I've had enough, I'm not going to buy this anymore, I'm going to put off that purchase, I'm going to put off that home renovation, then either the company contracts their margins and eats some of those additional costs, or they don't make the sale. So this is the key to the balance of the year. What will the consumer do?
Does it matter to you if it's 50 or 25? The Federal Reserve suggested that we will see a 50 basis point hike at the next meeting in May. Goldman Sachs, among those thinking it's going to be 50 basis points in May as well as in June at the meeting on June 14, 15. You don't see a recession over the near term, right? Even though we're talking about much bigger point increases on the Fed funds rate in the next two meetings.
Yeah, I definitely see the economy slowing down. It has to, right? Everything that the Fed is doing, including they're really going to aggressively shrink their balance sheet. But right now, recession this year does not seem in the cards. A lot of that, of course, depends on will the Fed over tighten? So we're seeing a certain amount of tightening the balance of this year. And whether it's 25 or 50, I'm not really concerned about that. But in the total for this year, how much are they going to tighten? So clearly, if they over tighten, they could push us into recession. I think they'll pause. I think they'll be careful about how not how often they tighten, but how much they tighten.
Yeah, Lou Basenese, jump in here.
Yeah, look, I want to challenge you a little bit on your recession views. The 2-10 spread, the spread between 2-year and 10-year treasuries, is getting close to inverting, and it's been one of the most reliable recession indicators. How do you respond to that? I know you like small caps right now. Do you lean into small caps because they tend to be more recession resistant and they're really cheap at 15 times earnings? Or how do you look at?
I think you're making a very valid point. But understand that the longer part of the curve, which is controlled by investors, typically when the curve inverts, it's a reaction to investors dealing usually with a global crisis. Think of 9/11, think of the financial crisis in 2008. So that's investors going, I don't really care if I'm getting paid less. I just want my money protected. We're dealing obviously with Russia right now, with Ukraine, crisis in China. I mean, there's a lot of stuff out there that's going to investors going, I don't care if I don't make any money. I just don't want to lose. I think that eases off later on in the year.
Well, you mentioned the consumer a minute ago. Let's talk about the April consumer inflation data. It's going to be out this morning. You say it's not going to be good, though unemployment remains low, currently sitting at 3.8%. What are your expectations for the consumer inflation data, which, of course, is at 40-year highs right now?
Yeah, Maria, I don't see anything at all in the early numbers here that says this is going to be a good number. I think it's going to be ugly again, and it might be ugly next month as well. But we'll eventually start to roll over, and energy is a big component of that. If we see energy finally start to roll over, that could take some of the pressure off the inflation numbers.
All right, we will leave it there. Dominick, it's good to see you. Thanks so much for being here this morning.
Thank you, Maria.